Fintech Chatter TV. Presented by Tier 1 people, leaders in Fintech executive search. Welcome to the first Fintech Chatter TV, the show where we bring together friends from the Fintech community and have a natter. For our very, very first show, I'm joined by three really special guests. But before we do that, just give us a like and make sure you subscribe to the show. Support the channel. Thanks. Well, I'm joined by Schot-Guppy, Bosco Tan, and Ben Ford. And I'm Dexter Cousins. And I think we sounded a little bit like a Hollywood A-list, but I'll leave that up to you, the viewer. So, Rebecca, can you introduce yourself to our watchers, not listeners?
Thank you, Dexter, for having me here today. My name is Rebecca Schot-Guppy, and I was the CEO of Fintech Australia, and now I'm the Director of Investment Leverage at IAG Firemark Ventures.
Bosco, would you like to introduce yourself to our watchers?
Yeah, sure. My name is Bosco. I about sort of 8 years ago started a business called Pocketbook, which is a personal finance management app. Probably prior to fintech being even coined as a term. IAG, incidentally, was one of our investors in that business. And then we sold the business in 2016 to Zip. I was the head of growth at Zip for the next kind of 3.5 years of hyper growth.
Awesome. And you're now doing a lot of investing yourself, is that right?
Yeah, so now sort of in my time off, quote unquote, doing a bit of advising, doing a bit of investing and trying to figure out what to do next.
And a man who needs no introduction, Mr. T-shirt himself.
Stole my line.
Ben Ford.
Thank you, Dexter, I think. I'm Ben Ford, Fintech's premier T-shirt collection, but day-to-day I work as head of growth at Frollo. Frollo followed, I guess, in Pocketbook's footsteps and is a PFM application helping consumers manage their money, but we also sell our software into banks, fintechs and other financial institutions to help them get to market quicker, doing a fair bit in open banking. And I have a lot of imposter syndrome here with these guys today.
So just stealing your thunder for a second, Dexter.
Go for it.
I just want to know the backstory of Postly. What did Postly do?
Postly is in stealth mode
yeah.
and to be revealed.
Free advertising there, guys. Well, we're going to talk today about, I guess, the year that was 2021, another year of lockdown, another breakout year for the fintech industry. But what I wanted to talk about today specifically was startups. I guess, look, we've all been involved in this space very beginning. It's been incredible to see the growth. But I thought it would be nice just to reflect back on this year and kind of talk about the businesses that have really impressed us and also what we expect to happen in 2022. So, look, I guess, Rebecca, you're probably a really good place to start. Ex-CEO of Fintech Australia. And now, your job's really to go and find those next generation startups. What if you were to kind of review 2021, how would you sum it up?
It's been a huge year, fintech in Australia. I think the highlight overall would obviously be the Square acquisition of Afterpay. I think that was a huge moment for Australian fintech. But in terms of the landscape, I think if we reflect on 2021, Intersect 2021 in Melbourne was probably a major change in dynamic of the ecosystem. It really did demonstrate that we are part of financial services and we're no longer just a subsector. And I think in 2 to 3 years, the FinTech conference really just be a part of a financial services conference.
So I kind of made the tool advocate, I think, this year. When I likened
we were definitely retooted
Intersect to
and if anyone wants to see the post, I'm happy to find it, but we're definitely retooted.
Yeah, but I think I'm going to defend myself here, right? I think it was just such an incredible vibe at Intersect.
Is this the Woodstock comment?
I kind of said, I think it was the other, and it just, for me, it was just such a great vibe. I remember the first morning, I rocked up late. It was like 9:30. I thought, I'll be like every other, kind of gradually get into it, say hi to a few people. People turn up dribs and drabs. Place was crowded. It was rocking. I was like, whoa, crazy energy in the place. And it was like that for 2 days. And I think, most of the discussions, I don't even think I've seen a single, right?
I just remember that when we were saying no, reflecting, we were saying no to giving people tickets. It actually had a waiting list, and I was like, wow, how things have changed in 3 years compared to when I ran it in 2018. But also thinking to next year. So before I left Fintech Australia, I worked with the team on what are the themes going forward. And we've grown and changed so much in a year. So next year we're thinking about DeFi, payments, Web 3.0. Like the way we're going is insane. Like we were talking about open banking 2 years ago, and now we're thinking about Web 3.0 and DeFi.
Yeah.
So I just think the trajectory is just accelerated.
Yeah. Bosco, what have you made from it? Because look, Ben referenced Pocketbook. It was probably one of the first fintech apps I ever downloaded. I mean, kind of talking about being in imposter syndrome. I mean, it's incredible what you did, but if you were to do a Pocketbook now, do you think that would be the approach that you would take, or do you think it's just almost impossible to get something like that off the ground now, given where it's evolved to?
Yeah, so I think when you zone in on particular spaces like PFM or even sort of share trading or money management, neobanks, like certain areas are definitely more competitive than it were. I think, like, if you can sort of step back and think macroly, what I think is there's this kind of user experience engineering sort of sweeping the entire industry of finance. So, like, it started off with PFM, right? How do you view your finances in one place? And now, like, buying shares in the US is easier, and you don't no longer have clunky systems. So you got Superhero out there, you have Stake out there doing a great job and a great user experience. Next is sort of, how do you access crypto easily from a mainstream perspective? We saw the announcements from Finder, we saw the announcement from CBA to look at. So that's kind of the next wave. So I think increasingly it's, what are the experiences? Almost like the improvements that technology can make to traditional financial service, hand-holding, clunky experiences. And that, I think that's where the value add is. Yeah. So that would be the mold I look at, like what's the next quote-unquote Pocketbook.
Yeah.
I'd just jump in there as well. I'd say if I was launching an app today, I'd hire Bosco as my growth marketeer or running the place. He'd probably hire me actually, or he wouldn't.
You
but
would hire me in operation.
I'd hire you, and I'd hire you as well for to get us in to do PR.
Do podcasts,
and I think Bosco's right. I think basically adding in so many layers of utility to a consumer. You want to be able to do everything. You want to get cash back on your spending or rewards. You want to be able to access crypto. You want to be able to, and we're really talking about super app.
Yeah.
So this is.
But what is so interesting about what you're talking about is we're only talking B2C, right?
Yes.
Just only spoke about B2C, but realistically we're starting to see the first wave of B2Bs making headlines. So Frankie Financial is a great example of that. And I think that that's the next wave. So obviously we're going to get more development in the B2C space.
Absolutely. And, our portfolio of clients has always been 70% B2B. The sizzle, I like to call it the B2C, gets a lot of the headlines, but I think the real innovations happening is in the B2B space.
In the fintech landscape, 80% of startups are B2B.
Yeah.
I mean, the other thing that's super interesting for me is how everything is becoming fintech, and fintech is everything. Like recently I invested in a business called Pushers. They basically sell sneakers. It's a sneaker shop, but what he wants to do is provide liquidity to the reseller, right? And that providing liquidity is traditionally what an investment bank does on assets, which in this case is sneakers. So like that's quite interesting in that he's thinking about these other commodities like finance and how to sort of engineer a banking play around these other things. So that's interesting.
Yeah, absolutely. Talking about that, I've read some and heard some comments that there's concerns that we are way over leveraged with crypto. There's a lot of leverage there, but also with all these buy now, pay later products as well. Are people just getting too much debt, leverage up on leverage? And if there's a crash, what does it actually mean? What's your take on that, Rebecca?
I think it's a really interesting question because I think that if you look at the purpose behind buy now, pay later, it's actually not about people managing their debt. It's about managing how they pay their bills and manage their money. So if we actually look at that and then think about the space as it is, if you have certain checks or balances in place, we actually won't see a crash in the market. It's actually about helping manage their money better. If you did read the AFR this morning, you would have seen that I suspect that buy now, pay later will be regulated in some form of capacity, whether that's calling it a payment or whether that is calling it credit. We will see some regulation in the space, but I don't expect for it dramatically to change the landscape, because they're all purpose-led and helping build better life and managing.
Do you think it was a bit of a known goal, the big announcement of buy now, pay later for food and drink in restaurants and bars?
Look, I'm going to steer away from this one. When you go to the pub in Melbourne and you see you can afterpay your beers, some questions may be asked, but I think, fundamentally, if you go back to Afterpay's purpose, they manage their money better.
At the end of the day, I remember when I was in my early 20s and got my first credit card, it was about £1,000 and I spent it all in pub, right?
How many designer dresses did I have when I was 21?
I think the other thing that's sort of coming out of this as well, though, and I think you're right, I'd sort of have a slightly sort of dimmer view than Beck on what the future looks like for some of these buy now, pay later organisations. I think the ethos behind them, I've got a different view on that. But I think what's been interesting has been a move towards certain organisations going completely the opposite way and working towards building financial literacy, financial education, not around necessarily share trading, which I don't have a problem with, and removing friction from that is great. But companies like Perla, I think, is pretty interesting in terms of, I think their slogan is get rich slowly. Certainly, Pocketbook originally, companies like Frollo, Money, all of the other PFMs, they're all trying to help people sort of manage their money in a fairly sort of sensible way. And I think that's kind of the other thematic that probably deviates. It'd be really interesting to see if there's an overlapping diagram between buy now, pay later customers and Perla's type client base. I would imagine probably not, because they've got a completely different ethos and philosophy. So I think that's been a good thing that's come out of this year.
I think that we have a very concentrated market in buy now, pay later.
I get so upset, right, and annoyed when I get people approach me, and it literally is every week. We're going to do buy now, pay later for recruitment fees, invoice factoring. We're going to do buy now, pay later on home loans, a mortgage. It's exhausting, right?
I've had someone come up to me and be like, family law, we're going to do it for family law. Well, all legal firms have payment
divorce
plans.
now, pay later. Bosco, you come in, mate.
I think I just want to chip in here on the buy now, pay later space. I think until everything kind of settles and consolidates, you're going to get this influx of people just trying at different paces. And it's better that they do it here in Australia and export it overseas rather than see it overseas and export it here. So from, again, macro view, I think it's healthy. In terms of like whether you have the consumer controls in place or the credit checking for businesses in place, I think that's the regulatory oversight that you probably need over the top. But I think as a petri dish, like to have, these experiments running on our shores is what's truly exciting.
And look at Afterpay. They're going to Afterpay Money. So they're transitioning their business. They're really changing how we look at money or how we engage in banking. So, I think this is really exciting.
I'm a big fan, right? I mean, our household, we don't have credit cards anymore. Got one for the business for loyalty points, but we've never used a credit card to buy anything. How we buy now, pay later. Furniture for the house, all sorts of stuff.
You're a prime example on someone that's using it to make their money better.
Yeah, but look, and that's, I've heard stories of people who've used it and didn't have to use it anymore after they paid off the credit card debts because they weren't paying $1,000 a month in interest payment. So I think it's a fantastic product, and as Bosco rightly points out, when it's an innovation it's gone worldwide, and whereas Klarna kind of had the seed for it, Australia really different level. Want to talk to you a bit more about, I guess, the startup space itself, and certainly how you feel it's evolved from a founder perspective, in terms of support, access to capital. Fintech Australia wouldn't have been accepted when you started Pocketbook.
Yeah. So I specifically remember the early days of like Stone and Chalk and Fintech Australia, the very sort of inceptions of those conversations. I mean, we were part of it. I think what's changed greatly is the ability to dream bigger. Like for us, just reflecting back, a couple of things that constrained us. One is probably this bigness of vision, and not able to see what's beyond a mint.com exit in the US. You know what I mean? Like we couldn't see the next iteration. And if you look at, those have come after us, whether it be Revolut in the UK or, some of the other buy now, pay later ones locally, like there's almost this bigger vision. And whether that's because the ecosystem allowed it or whether it's the actually more experienced financial people, like people with proper finance backgrounds got into kind of innovating. Those were sort of the little seeds.
Yeah.
So once that comes, then capital comes. And once that comes, the ecosystem gets bigger and bigger. Certainly, I think the naivety of a founder today is probably, like they're leaps and bounds more educated around everything, whether it's fundraising, how to pitch their business, how they fit in the market, how they're going to sort of reach everyone. It was so much more advanced than it used to be sort of 10 years ago.
If you were going to, I guess, do a startup now, there a space that you would pick?
So part of the reason why I actually ended up investing in a couple of businesses is I went sort of in these rabbit holes looking at different areas and ended up sort of finding a founder that's already working on it. I think it was just easier to invest. I think for me, the hottest horizon has to be Web 3.0 and it has to be sort of in crypto land. Yeah. So it's sort of getting deeper and diving into that and seeing how we can.
It feels like every VC on Twitter is saying, I'm diving down the rabbit hole of Web3.
But again, coming back to this power of dreaming, right? Like you think about today, like if I'm innovating and thinking about Web 3.0, I'm thinking global first in a finance company in Australia. Whereas when we started, a lot of the pushbacks from VCs like Blackbird, etc., is like as a fintech play, you can't be global.
Yeah.
Right. And that was the reason why Zip and Afterpay couldn't get venture funding here like at scale and had to list.
Yeah.
Right. So I think that ecosystem has changed and that understanding has changed. Like you can actually export or create global and export from Australia in the finance space.
Yeah. And you kind of talked about this earlier as well, Rebecca. To me, it seems a bit odd that it's almost like an oxymoron. You have decentralized and VC at the same time. How are you going to make something like a DAO work with heavy VC involvement?
I'm going to pass that one on to the crypto expert.
Well, I'm not an expert. Look, I don't know anything about this, but like...
Mate, that's the best place to start because I think once you think that you know something, it will change us anyway.
The government's thinking about actually regulating them and making them legal, which is huge, right?
Yeah, it's massive.
But are they actually doing it or are they actually talking about it? I can say that now.
It's government, so you have to say both, right? So it happens.
This is a little controversial. The stuff that the government wants to do around regulating this space and the stuff that the government is suggesting that they want to sort of hanker down on anonymity on the internet and so on, right? That's like a couple of weeks ago. Like if that fundamentally affects our ability as Australians to innovate, like one, to actually create the company here, and two, like it slows down our like user acquisition because, it's like so much more friction. It's just going to impact our competitiveness versus the globe. Like I don't see why they are doing that. I mean, I see why they're doing that from a social benefit perspective, but like from a sort of globally competitive innovation perspective, I think they really need to think deeply about how to achieve those things.
Where does CDR fall in all this? Because, I mean, it's been huge, massive play. We're trying to lead the world here in Australia with it. And then I look at Web3 and I think, well, you need CDR. What role does it play in that space?
On Ben.
Don't say that now, Dexter. We are too far down the CDR rabbit hole, I think, for anything to derail it. It's a good point. I can't profess to have the answers. I think we, in the last few months, there's been sort of momentum shift and things are starting to gather at least some semblance of pace, which is amazing. So it's felt like a really slow burn. We were we went to meet with Scott Farrell.
Right.
And a delegation from Fintech Australia before your time, early 2017 in
Yep.
Mallesons, in his office. And when it was the Farrell Report version 1 was, I guess, a glint in his eye. It's been a long slog, and it feels like finally, post July the 1st this year, when more banks came online and...
So we got the intermediary rules.
Absolutely. There wasn't a position for intermediaries.
Which I think that was the game changer for CDR, but you have to think about consumer. I know Web 3.0 is coming and we're all talking about it. Is anyone at home talking about it?
No.
And so there will be a slow burn.
I think this is where, though, it's not about whether people are talking about it, it's whether they're already doing it. And I look at my kids who are immersed in virtual worlds to the point that, it's becoming a concern for parents, mental health issues and everything else, right? But they are in the metaverse and they spend their pocket money on their avatar and what it looks like, and they ask my opinion on whether they should get this fur coat, high heels, and this other stuff for an avatar that walks around in a virtual world in Roblox. Right?
So
That's all happening. The only thing that's not connecting it is how they have to move fiat into a digital currency. Right?
Yeah.
That is the only thing that I think Web3 then takes that to the next
But
level.
we still there will still always be data regulation, despite us interacting in a virtual world. There will still be data regulations. So CDR does have a place to play. It may not be CDR. It may be a different interaction with data, but you're playing in the virtual world, and so your kids are making an avatar over there. That's their data.
Yeah.
Or I don't know whose data it is now, but essentially, if we're looking in a CDR lens, that's their data.
Yeah.
What kind of asset is that for them to then exchange in a future world?
And I think you nailed it there with your wording, Dexter. You said no one's talking about it, but they're doing it, and that's the whole sort of ethos or philosophy behind open banking.
Yeah.
Right? No consumer will know that they're doing it, but when they go into a banking app, they'll be able to switch from a very low-paying or a PFM app. They'll be able to switch from a very low-paying account or a very high interest rate credit card to something simple, to something different, and offering them much better financial opportunity at 4 or 5 clicks of a button.
And even if they have a digital currency, right? That digital currency have data attached to it.
Absolutely.
And so you do a data exchange.
Yeah. So one of the other kind of trends I've noticed this year is a lot of my fintech friends, members of the community, founders of fintechs who've exited, they're all gone into digital assets, blockchain, crypto, whatever you want to call it. It's kind of, it feels like this has been a massive, almost like awakening of, what was bubbling and fizzing has now just gone, right, that's it. It's happening. We had a bit of a crash at the weekend around asset prices, but you have to say, this is it now. Got full acceptance. Say, Bosco?
Yeah, I think so. I mean, you have a couple of landmark things, right, where, China road tested a year ago their own sort of government currency. You have these small countries basically suggesting that they want to use Bitcoin as the default. So I think there's certainly a wave, and there's a wave which is probably more concrete than speculative. Like you compared to 2017, it was just like, everyone's sort of, there's still a lot of hype in the market for sure, but I think there's actually now something concrete.
Yeah.
When REST comes out, albeit true or not, saying that they want to put some of the money into crypto, some of the superannuation money into crypto, then I think the wave is turning. Certainly, I think if we had barbecues for the last year instead of being locked in our houses, we probably would have heard crypto conversations more and more.
Yeah.
And certainly, when I talk to anyone under 30 today, like whether it's an Uber conversation or just someone in a bar or something, because I met them, like they'll just rattle off 3 or 4 different coins.
Yeah, they're all talking about it. I go to the gym and people that are not even in finance about crypto. It's super interesting.
Yeah. Well, when I moved into my new house, my new neighbor came around to introduce herself, and we ended up having a conversation about crypto, right? So.
But what is interesting, not only is everyone talking about crypto, but over the last year, fintech's become a household name.
Yeah.
So like superhero Wiser, Before Pay, After Pay, all advertised during the Olympics or during the AFL season.
Yes.
Then on radio you hear Athena Home Loans.
You watch a Premier League coin jars, like a shirt sponsor.
Yeah.
It's incredible, right?
It's incredible that my brother trades through Self Wealth. Like the fact that all these fintech products are now becoming household names. It's only really happened over the last 12 to 18 months. Like all the tradies know who Athena are or TikTok are, and they're getting their loans from digital home loan lender rather than going, to the bricks and mortar ANZ. So not only are they talking about crypto, but about fintech in general, which is completely different.
Yeah, that's a great point. I think also though potentially there's been a gap or a period of waiting by the big four banks who are going to sort of start to feel this wave of disruption to some degree. We see it in CBA and the investments they're making, whether it's through X15 or directly. These are not insignificant investments, and you're just sort of waiting for the moment when they pull something together. And there's your super app in Australia right there.
Yeah.
Every single product,
They've
so much
been
functionality.
building that for a while.
Absolutely. And there was the piece around ANZ this morning going full
10-minute
digital.
loans.
Yep, absolutely. And I think they're probably starting to feel not a pinch by any means, but maybe just sort of a bit of Bunsen burner warmth coming off this.
We haven't even
sort
mentioned
of fintech wave.
that NAB bought 86,400 this year. That also happened.
Yeah, and look, it's kind of the media made out like it was a bad thing, and I just thought it was
a
an
great
absolutely incredible, one for innovation in Australia that they could have gone with Mambu, they could have gone with 10x, like any one of the foreign providers. And what they decided was not only to invest in technology, buy a bank, right? And integrate it in the product suite and everything else. And if you look at what 86,400 have done globally, like they've done a lot of world firsts, right? Mortgage product on a first 12 months, really great stuff. So yeah, I think it's we all knew, right, when the neobanks started to make noise 2016, 2017. We all knew it wasn't right. There's no secret. We all, it's not right. I mean, we were all there going, cost of capital, cost per acquisition. This is it's Australia's too small a market. The big four banks will crush them. So we all knew that the best outcome was going to be a sale to a big four bank. 86,400 did that within 3 years. We've seen Up in the partnership with Bendigo, and again, I think they've been the models for a digital bank, at least, that you've got to work in tandem with the bank itself. It's just hard. You need 50 million a year in capital just to keep the lights on. You're a startup guy, right? I mean, if somebody said to you, "Hey, I got a great idea, Bosco, but we're going to need 50 million to do anything," and another 50 million 12 months on, another 50 million, and that's just to keep the lights on. And after 200 million, we might get a product out. You're interested.
It depends on who it is. It depends on the opportunity. But yeah, it's not a no-brainer kind of execution, right? Because lean in that world looks very different.
I think, 2018, all we would have been talking about would have been the banks.
And CDR.
CDR. Yeah, we were talking about Web3 right now.
Absolutely.
DAOs and metaverse.
Vault is still there. Vault is still plugging away.
Yeah.
They've had a good pivot though.
They have.
Yeah.
But I think what it's forced everyone to do across the board, whether you look at the PayPal app experience, I pay attention to app experiences, right? Whether it's PayPal, even look at Zip, and how it's kind of elevated the experience. It's kind of forced that experience step change across the board. The banks, even my banking experience has been not great, but it's way better than it was 2 years ago. So I think that step changes. And also the other thing is, increasingly people are phone driven. I think if you look again macroly at sort of the bigger trends, the number of people carrying wallets today have dramatically decreased. It's just what am I doing on my phone? One, I'm okay with QR codes now because I've been doing it for 18 months, so I get it. And everything's off a phone, and my license is on my phone. So why do I need a wallet? So that shift change is going to be better in the next kind of coming years for innovation.
And that's not just at our generational people under 30 or people under 45. Like my mum's paying on her phone at
Yep.
67. My dad's paying on his watch at 70.
My
Like,
mum just sent me money over Revolut to get the kids an ice cream yesterday.
Exactly.
it's great,
like we're
right?
seeing
You don't need to borrow off
multiple-
your mum. You can have to pay that next
We're
time.
seeing generations, all generations starting to have
Yeah.
this shift. So it's a really interesting dynamic in payments.
I mean, the other one I want to talk about is something like Mr. Yum. Like that's
Oh,
a
man, that's incredible, yeah.
landmark
Yeah,
deal,
yeah.
and it fundamentally fits into this cultural shift of like behavior change.
Yeah.
Like, you know, you're paying before you get your food, and you're doing it like without anyone, and it's a very different
And
experience.
it goes to the point that you kind of raised earlier, right? This blurring of the lines.
Yes.
You know, I read the headline. It was Fintech, Mr. Yum raises.
Yes.
You know, I was like, Fintech. It's an ordering app, payments. Yeah, but it is Fintech,
Absolutely
right?
fintech, yeah.
And
But
that's
we're
kind
seeing
of
that in the health space.
Yeah.
Right?
yeah.
There's plenty of like health apps that you now pay through your phone, you pay through all those kinds of things. And so health tech's becoming
Yeah.
fintech, ag tech's.
Yeah, I mean, we had the Main did some work with them this year, and had Jason Pellegrino on the show, the CEO, earlier this year, and even he said, you know, at the Main we don't consider ourselves a classifieds business. If anything, you know, more of a payments business, and that's this is a real estate.
So I think the like just forecasting the shift, like fintech ultimately I think will be two things. One is actually the consumer facing or the business facing experience. That'll be like a school of fintech, and then it'll be like platforms and pipelines. That's actually fintech. And I mean there's that split today, but increasingly the pipeline, that stack will grow thicker and thicker. It'll include things like crypto, it'll include things like, you know, payments and buy now, pay later and so on. And if I'm a service provider of any sort, I can just go, give me fintech, and bang, I get the whole stack.
Get your EKYC
Yes.
or your AML, all the things platform,
Yes.
which we're seeing Frankie.
Yeah,
Yeah.
absolutely. Well, we're kind of coming to a wrap up. We are coming to the end of the year. Gosh, I think we all need a break. But as you look into 2022, who's going to be the fintech that you think should watch out for? Ben?
Well, there's a few that we've
No,
sort of covered.
one.
I'm blown away by Sherlock at the Intersect Festival this year. I saw them at the pitch night. So this is a repricing of a mortgage broker's back book. So not selling the mortgages, but account management at the back end of the process to engender stickiness, customer engagement, long-term customer relationships.
Yeah, also to help, I'm pretty sure they help manage so that you can actually get your client to renegotiate a mortgage. So you'll
Absolutely.
all those kind of
Yeah,
things.
and I think that's really interesting. I think the messaging and the presentation that Adam did was fantastic, and he's a great guy, and I think they're destined for pretty solid things. They come.
So you're going to be wearing a Sherlock t-shirt next year?
He sent me a few Sherlock t-shirts, and he actually autographed one of them for me. He wrote Sherdog across the back of it. So I've got
Well, he did play football for Port Adelaide, so double trouble.
Like, I knew there was something about him. He's a very handsome guy as well. I was kind of a little bit intimidated hanging out with him, but I think they have a pretty good proposition.
There you go. Ben Ford has the hots for the founder of Sherlock.
He knows that.
Rebecca, what can you say? Because
I can't pick a favourite. I can never pick a favourite. But I think we may see the rise of some of the B2Bs.
Yeah.
So I'm going to go out on a limb, and it's going to be another female founder that I really, really respect. And she's currently the chair at Australia. I think Simone Joyce at Paper Plane is going to do some very, very cool things next year. And watch this space.
Bosco?
I've actually got two as well.
Yeah.
Do you want me to cut
Just
down
one,
to one?
just one, yeah.
So it's actually, both of them are crypto projects I'm excited about and I've invested in. There's a company called Tick, T-I-I-K. What they want to do is basically the sort of crypto, like what's evolving in the crypto space around investments is super interesting. Like it's no longer holding currency and seeing currencies appreciate, but it's actually the money market, like lend crypto and get a higher return because people can do more with the crypto. So you see these average annual returns of like 20% or so, although not government guaranteed. So when you invest money in that space, you can actually get way better returns than if you invested in things. So to that effect, these guys are trying to bring that to the mainstream.
Awesome.
What about you, Dexter?
Well, the one that I've I believe is going to do great things. I can't share because they're in stealth mode. But what I will say is we've helped them put together a really awesome team. And it's blown my mind to see what can be built when you have really great and, pretty young people get together with capital behind them and come up and really try and build something.
Can you say what kind of area it is?
It's kind of CDR related lending products, but
You told me earlier.
completely tipping. I think the thing that's got me really excited is my criticism of fintech has been, whilst the front end changes and it's a slick experience, the products all remain the same. And these guys are building products that are based around what potential you have CDR and being able to get all of that data and build products specifically tailored to the individual. And that's got me really excited.
I'm very interested to know what it is, but I would like to also just say thank you to Dexter, not only for having us today, but also for the great work that you do in the tech space throughout the year. So you're a huge contributor. I know that you contribute to Australia, but you're a huge contributor to the ecosystem. And I know everyone enjoys your podcast.
Well,
So
it's just awesome. Thank you very much for that. But I just feel so privileged to be part of such an incredible community, right? Fintech Chatter TV. Presented by Tier 1 people, leaders in fintech executive search.